Yeah, no, that's a great point. So a lot of these companies are kind of behind the times. They're trying to take increases in pricing based on commodity costs from about 6 months ago. That's not flying anymore for a lot of the retailers who are looking at these companies saying, well, wait a second, you're taking prices up, but it looks like resin prices are down. It looks like other commodity costs are down. So what's going to happen going forward here?
And we know that Procter & Gamble had a great quarter, was recently trading at all-time highs in the last week or so. So investors are clearly thinking ahead, but it seems like they would think that Procter is going to push through higher pricing. Who has pricing power in this sector?
Yeah, so that's the core question. That's the vector we look at in terms of which stocks we like and we don't like. And what we see is, a company like Procter & Gamble, they're going to take some prices up for sure, but they're not going to take as much as other competitors, as some of their competitors who don't have as much, for example, cost savings that P&G has. So we think P&G on a relative basis looks okay. We think some of the beverages names, like a Coca-Cola or a Pepsi, where it's two players trying to take prices up and they're not going to fight each other, we're quite attracted to that. We think there's pricing power there. And we like Estee Lauder as well. That's one of the companies in the kind of higher end of the price points, a little bit more prestige, a lot less price sensitivity at that point as well. So you're right, pricing power is one of the key things we look at right now.
Ali, also, we were just speaking about what's happening with tax rebates this season. And look, if the government's about to be shut down, it's going to be delayed again. How exposed are consumer staples and consumer discretionary to smaller refunds if that trend continues?
Look, very exposed. I think the hope was that the tax changes would give people more money, and so they'd spend more. Unfortunately, a lot of that money has been spent, and we are seeing from a refund perspective, whether it be delayed or not, is that it's much lower. That's going to impact my companies in a very, very big way, and even more so discretionary names. You don't have that check coming in, you're not going to spend as much. And importantly, in a lot of the consumer packaged goods companies, they've priced themselves higher, as we just talked about, and they've tried to do so over the past few years. And so they've let a lot of players that are lower price points come in. So as a consumer, if you don't have as much money, you have the opportunity to trade down as well. That's going to be a big issue for a lot of my consumer packaged goods companies.
And finally, Ali, when we talk about the retailers, if they're going through distribution channels like Amazon and Walmart and Target and so forth, are those retailers going to be pushing back on higher prices if they see them, or how do you expect that to work? And will we ultimately see profit margins shrink for consumer staples?
So yes, they will push back. I think the big question in this whole consumer landscape is how do the packaged foods manufacturers and packaged goods manufacturers have 18, 19, 20% operating margins, but these poor retailers have 3 or 4% or 8% operating margins, and Amazon sometimes not even making money. So I do think you'll see a pressure from the retailers, especially because the commodity costs, as Jim Cramer said, right, are rolling over here. I do think it's a big problem.